Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny, and today we're going to talk about Jay Powell. They had the quarterly meeting for the Federal Reserve where they update their economic projections for the year. We're going to talk about what he had to say at the press conference and get into a little bit about what we see in the future.
Two Super Guys Trade Stocks.
So I know you got to see it today, the press conference, because we were texting back and forth a little bit. But
Yes.
how much do you think he was looking forward to that soft landing question?
He clearly was waiting for it because he rolled it. I mean, he didn't roll his eyes. He was like, no soft landing is the answer, is what that
Yeah.
means.
Yeah, soft landing. Basically, the bank failures took away the lube for this failure.
Yeah, kind of.
That's what's going on here. Okay.
Yeah.
Um, so these are kind of the notes I took from the press conference. Basically, soft landing less likely. He basically is saying that the kind of financial crunch that we saw with those bank failures last couple of weeks will act in effect as like almost a rate hike, because banks are going to be a little bit more prudent with their capital. The lending of money is going to be a little bit more judicious, a little slower, probably a little bit lower level. So you're going to see the same kind of tightening of economic conditions that you would have seen from a rate hike. That's why they
Right.
went a little softer. You
Yeah.
know?
And for people that were thinking there, so originally there was like, oh my gosh, they're going to do a half point, and then the banking crisis thing happened. You could argue this was not a half point, but a point and a little bit of extra frosting, right? And he did say that he doesn't think the economy in general, stock market, has priced in the entire credit issue that's about to happen.
Okay. When he was talking about indexes, he was talking about something a little bit different.
Yeah, not the
He was
spy, not
talking,
that.
yeah, talking about a metric that kind of helps you measure how willing companies are to lend money in certain sectors of the economy. There's several of them, but basically that he was saying that even those metrics don't really accurately reflect how much tighter lending conditions got, because they're more based upon rates than they
Mm.
are about like the actual credit worthiness of the buyer that'll be being required. Is I think is what he was trying to hint at there.
Yeah, no, I agree.
That was, yeah. But they're still pricing in another rate hike as of right now on the projections. A 5.1% terminal rate is projected through the end of the year. So the previous kind of chart we saw here, where they were getting a quarter point basically cut per month after we had like June. He's saying no, that's not what we're thinking right now. I
Twice.
mean, you never know. Yeah.
Yeah.
So
The
evolve,
last
but
question, because I mean it was asked multiple times. The last question they ended on is like, is there anything that could happen, that could make you the cuts? And essentially he's like, possible. No. So, dude, we're not getting rate hikes this year. It's not going to happen, and we
yeah, I mean,
shouldn't.
rate cuts. Yeah.
Yeah, sorry, rate cuts.
Yeah. So, still expecting a 1% bump in unemployment. It's 3.6% right now. They still have the terminal projection for the end of this year at about 4.5, 4.6%. So he's still saying that they think unemployment will eventually start to trend up. This I thought was interesting. He did mention this specifically. He said that inflation had still been trending above their expectations, that it's being more persistent. So, he did hint at that. Did you catch that? Was one of the questions in the answer section portion.
So
But that it would be more persistent.
if you look at the market, which we're going to look at the market after this, we went up, and then during his entire speech, we did not go down. We went down on the questions, and it was around this question. So,
Yep. Yeah, this is the area where the market starts to be not so happy. I mean, granted, it was pretty tame, I would say, overall
mm,
market reaction to like for a Federal Reserve. Jay Powell speaking, Janet Yellen also spoke, and apparently they didn't really like what she had to say about not being basically having this FDIC unlimited backstop uh, in perpetuity. Yeah,
that's
did you
iffy.
catch that one?
I didn't get to watch that one. I just saw the highlights.
Yeah. So, and then this was, I thought, kind of interesting. Someone asked about, like, this is a little bit above my pay grade as far as what the Federal Reserve's tools are when they kind of corral banks. But someone asked how many banks have been kind of issued warnings, if you will, a little bit. And he was like, I don't know. Then you heard someone else chime in and he said, oh, it's six was the answer. So six banks were apparently under the scrutiny of the Federal Reserve, if you will, to the point of they had to issue some sort of written letter to them.
I mean, you could. This is purely like if you look at our last video, we looked at a Michael Burry tweet that showed a lot of regional banks and their lending versus unrealized losses, that kind of stuff. And SIVB, Signature, clearly Signature, those are two of them. FRC is up there. I would assume that was at least one of them. There was two more. I can pull it up. I don't remember, but there was two more that were kind of high.
Yeah. So, the other thing we kind of learned is that, he talked a little bit about investigation going into that Silicon Valley Bank failure, and that, the Federal Reserve was in contact with them and kind of trying to address the situation prior to the implosion, and that they're going to be kind of carrying out an internal investigation as to, what they can do better next time in terms of how aggressive they should be at what stage, rather than letting the bank blow up like it ultimately did. So you probably have seen this before. This is the dot plot. This is the expectation of the Federal Reserve governors on what they think the interest rate will be by the end of the year for the Fed funds rate. So if you see right here, it's kind of clustered just in this 5.1%. That's for the most part. There's only one person saying that they think the rate will be below 5. So out of the federal governor's board right now, there's literally only one person that thinks that we want to have at least one more rate cut this year. Rate hike, sorry.
Yeah. So, yeah, geez. So I mean, it could go a lot higher.
Yeah, and then obviously trend down over time. That's been pretty consistent. They do think that this is still something they can fix, and that this isn't abandon all hope, and that the rates will be high forever. But still some work. So this is kind of interesting. If you're looking at this here, so this dotted blue line, that's basically the expectation from December. So what they're showing you is how that is kind of translated over the time period from December to March. And if you notice, it's kind of like a little bit of an upward shift here. This is actually measuring PCE. This is overall PCE.
Right.
So, they are saying that, it's still actually higher expectations for this year than there was even 3 months ago, that, the inflation is still being a little bit more persistent. Same thing was for core PCE. This graph is probably a little bit more startling, actually, in terms of it really dramatically shows that difference here. Like I said, this is what the voting was back in December, and this is what it is today. The kind of lighter blue solid boxes.
Yeah.
Than the dotted lines.
People really focus on the month over month, which is. It's like day trading using a minute, just investing using a minute timeline instead of a day timeline. Like you have to look at the whole trend. That doesn't help.
Yeah, once again though, the kind of positive thing is you're still saying that they think that this will be kind of the last year of a higher inflation, if you will, and then it'll trend back down next year, and then finally 2025 we get back into a more normal range. It's still what they're projecting as of right now, which is always questionable. If you want to go to the chart, we can look at that now.
Yeah. Also, while I have this up, this is pure speculation. I'm completely guessing, but WAL, which was also hit massively, could be one. East West Bank was also around. It was very, very high, and FDIC is 80% of their deposits. So it's possible. Just guessing.
Interesting. Okay.
So here's the cues, all right? For people that are asking, I am still short. I texted Vinny. I was, I'm most likely going to lose on the June ones for sure. It is what it is. You learn, live and learn. I was texting him, and I was almost kind of mad because I was like, I almost just want to take the loss and just get out, right? But it went down just enough today to where I'm like, oh, Jesus, all right, I guess I'm going to hold on. This sucks. I would almost rather just take the loss, but whatever. The cues broke above a key level here, right? When you zoom out and you have a downtrend, then you have this, like a big downtrend, kind of down, boom, and you come up. We actually broke above this line here for like a second, and then we came down on. It's hard to say high volume because, yes, it was high volume, but it's a Fed day. It's kind of everyone's watching the market. So we won't really know the conviction of that till tomorrow, to be honest. It would be biased of me to be like, oh, look at the volume. We're going down. I want that to happen. But if I take myself out of my current trades, it's not really a fair representation. And then the SPY, we were above this 200 for a while, popped it, went up. Now we're back at it right again. So I would be lying if I had an accurate prediction of what's going to happen. But one thing we should do is look at, so the whole day was pretty nothing. It was just
Yeah.
barely moving, right? Like
Yeah.
I tried to day trade today. It was terrible because like there was just
I
no
mean,
movement.
I think even like a 2-year-old could tell you at what point did Chairman Powell start speaking.
Yeah, yeah. It's someone mentioned that the Fed has no effect in the market. I don't just look at the chart. I don't know. I don't know what that like. This is not a coincidence. It also happened every single time. But basically, rate hike came out here 2 o'clock, right? And then he started speaking 2:30. Initially in his speech, we came up, and then this was the question part. This is where he started. He ended his little spiel and started asking questions, and it was just downhill from there. So it was like the first. This is 10 minutes right here. It was about 10 minutes into questions when you mentioned that previous question of soft landing that this did not go well. So
That's hilarious.
yeah, then he closed out and yeah, ended.
To add to your previous point about like how important the Federal Reserve is, someone asked me who Jerome Powell was because after I said the name, I said he's just the most important man in the world. It's fine.
He's just he's well. To be fair, I do think this time is unique, right? I wasn't watching the market super closely like between 2012 and 2018, but I don't think Fed meetings had that big of an issue, right? Because we're not in this situation. So
Yeah.
he definitely has more weight than ever before. Like nothing happened. The SPY was trading below 50% volume the whole day until that happened, and we ended with an above volume day, just to put that into perspective.
Yeah.
So
I'm gonna bastardize this quote, but there's a quote that goes, "I care not who the leader of the country is. I care who the controller of the money is."
that's close. I know what you're
Yeah.
saying. I don't remember who said it, but that's a pretty good quote.
Exactly.
Yeah, let us know what you guys think. I'm still in my shorts, unfortunately. I don't even know if I have to stay committed now, but it is what it is. I will say, real quick, sorry, I did buy 10 more shares of Schwab. I'm at 70 or 80, and I bought 120 shares of PACW, which
Okay.
was from a previous video. We talked about the bank. As soon as he said regional banks do have sufficient liquidity, the vast majority of them, and looking at what the CEO said earlier, I'm willing to take that risk. I don't really want to buy more shares than this. It's about $1,300 or something, or $1,100.
Okay.
So I did enter that position.
Nice. Hey, you should check out Cameron Stewart's video on Charles Schwab valuation. It came out today and it changed my opinion a little bit.
Ooh, all right,
See you
guys,
guys later.
have a good one.